everyone, it's Alissa Coram here. Now, IBD founder Bill O'Neill to this day remains hugely influential to what we do on a day-to-day basis. So I caught up with Justin Nielsen, he's our market research director, and he worked directly for Bill for some 16 years. So I wanted to catch up with him to get some great stories and lessons that he learned directly working for IBD's founder. So Justin, let's start out. I know so many people who have been following IBD for a long time have the backstory of you working with Bill. But first, before we dig into lessons from Bill, let's talk about your relationship with him and you working alongside him, because that was very cool that you got the opportunity to do that.
Yeah, I mean, I had only been working at the firm for 2 years, and I was working on a project, and I was really getting into Excel for this project. The operations manager kept on asking these questions, and I kept on thinking, gosh, Excel, I could find a formula that can do that. And what ended up happening is he needed a new assistant because the assistant that he had was going to be promoted basically to become the marketing manager. And because of this project that I was working on, I was showing it to both Scott O'Neill, who was the publisher at the time, that's Bill's son, and then eventually to Bill. And that's how I got on his radar. And so he brought me out to lunch one day, and I was just like super nervous. I thought it was about this project. So I brought all of this paperwork with me for this lunch. And he said, hey, how would you like to come work for me as my assistant? And, you know, keep in mind, my intention was to only work at this job for 1 year. And then I was going to go become a teacher. So it had already been 2 years. And then this opportunity dropped in my lap. So I'm like, well, I got to take this, because here I would have the chance to work with one of the, greatest stock market gurus of all time.
Yeah.
So yeah. And then, that 2 year stint, of course, turned into now it's almost 25 years that I've been at the firm. So
yeah,
that's great plans.
That's pretty incredible. Hey, you never know how those Excel skills can pay off out there, everyone. And why does that not surprise me? Because you are our Excel guru. So it's only
and of course, this is all with an anthropology major. So it's not like this was what I thought my path was going to be. But certainly one of the best parts of my job, very early on, I was working on presentations with Bill. Now, keep in mind, back in those days, it was on an overhead projector. Right? So it wasn't PowerPoint, it was transparencies. And so a lot of times we had the entire book, the entire workbook that he would be going over in transparency form. And, I usually said, okay, what stocks are you going to talk about this time? And so I'd have them prepared ahead of time. But then every now and then someone would ask a question on something else. And so I'd have this little accordion folder, and I'd have to go through and, okay, what page is it? And I had it all separated out by tens, so I could find the page real quick, slap it on the overhead projector, and then he could talk about the chart, because he loved talking about charts, all the things that you could tell, the psychology behind it, everything like that was just absolutely fascinating. And that's where he really excelled. Of course, he was a big fan of weekly charts over daily charts, simply because that's what he started with. And he had these old books, these old weekly chart books. I have one somewhere around here that you could put in your back pocket. It was thin enough to put in your back pocket with charts, weekly charts of the leading stocks of the time.
Right. And that wasn't one of our official lessons for today, but weekly charts, really looking at those and, not having knee-jerk reactions by what you see on intraday charts or daily charts, make sure you consult those weekly charts before making your sell decisions.
Yeah. And that is where he did a lot of his original studies, because that's just really what was available for the most part.
Right. Exactly. Okay, Justin. So let's talk about a great trait of Bill, and that was his ability to be ultra flexible. I know sometimes we kind of relate that to being able to bend like a tree in the wind. Tell us about how you saw Bill O'Neill being flexible.
Well, and I've told this story before, so bear with me. I know you've heard it at least, Allie. But certainly one of the first things when I started working for him was September of 1999, and I brought him to the airport. And in that car ride, we were talking, and he was talking about how bearish he was. He had just sent letters to clients, 500 clients, institutional investors. Okay, this is like the Fidelities and all of these big guys, and he basically came out and said how bearish he was and everything like that. So he gets on the plane, he comes back, a few weeks pass by, and I'm noticing that he's doing a lot of buying. He's getting heavily invested in the market. And I asked him, I said, well, gosh, just a couple weeks ago, you were telling me how bearish you were. And it was almost like he had forgotten about it. Like, what? And again, it's not like there wasn't proof, right? I mean, he had sent letters out to 500 clients, but he just, kind of looked at me puzzled, like, but we had a follow through day and there's all these setups and, it's different now. So even though he had kind of made a stand and kind of put himself out there, he was very quick to just change his mind and say, oh, but now it's different. And if he had, let's just assume that if he had said, you know what, I told all these people that I was bearish and I've got to stick by it, he would have missed out on one of the biggest runs that he had in his entire career. The move from October 1999 to March 2000 was phenomenal. And he had stocks like Qualcomm that more than doubled in price during that time. So again, having that flexibility, being able to just turn and say, hey, that was then, this is now, I'm using the data that's coming in and reacting to it, as opposed to saying, well, this is my opinion and I'm just going to stick with it no matter what. It just really, I saw him do that over and over again. And it just really kind of taught me a lesson that you have to be able to accept that new data as it comes in and not just stick to your guns saying, well, this is what my opinion was, this is what I told people, and I've got to stick by it.
Right. And I feel like that actually hurt a lot of people, a lot of talking heads out there after the coronavirus crash, because all of the headlines, there was so much doom and gloom. But if you just looked at what the major indexes were doing and what the setups were like, having that flexibility to have that open mind and separate your emotions from the day-to-day facts, not try to predict, but just interpret what you're seeing right there, then is what really it helps you become a successful investor.
Absolutely. And, this is another trait of his, is that optimism. He always had that sense of optimism where there was a belief that, look, we're going to come out of this. And so you always have to be ready for those opportunities. He believed in the entrepreneurial spirit of America. He was an entrepreneur himself from a very young age. He had a paper route and was always trying to figure out ways to make money. I mean, he had a very modest upbringing. Actually, you could say pretty poor. I mean, he grew up in Depression era. So, he kind of had that mentality, but he always believed that good things come out of the darkness. He often pointed to how many things came out from the Depression era. How many different products and new things came out. In the 80s, how many new companies came out as a result of some of the tax changes that happened and incentivizing entrepreneurship. So he was always very big on incentivizing that entrepreneurship because he believed in the American spirit and the ability that humans have to create amazing things. And he always felt like there was that new thing that's just right around the corner. And so if you got too doom and gloom, then you were potentially cutting yourself off from some of these exciting things that were happening. And at a certain point, you just have to look at what's happening in the market. You have to remember that the market is forward looking. It's looking out 6 to 9 months. And if you're too stuck on today's headlines, you're going to miss out on what the market is seeing ahead. And this has happened multiple times where things were looking pretty bleak. And in 2003, I remember the market follow through that we had back on March 17th of 2003. That was right amid us about to attack Iraq, and the feeling that, oh, there could be weapons of mass destruction. Saddam Hussein is a madman and he's going to blow up all the oil fields. So a lot of times, if you're looking at the headlines, you could miss these setups, these what the market is seeing going forward. Because remember, it's looking 6 to 9 months out. And so if you're too focused on what's happening right now, you're going to miss what's potentially happening in the future. And there are so many exciting opportunities coming out all the time that you have to have that optimism of what's possible. Certainly for myself, if I had been just looking at the headlines in April of 2020, or even if I had looked at headlines coming up in the next month or two, there's no way I would have invested. I would have been too scared. But again, looking at what the market was doing, look at what the setups looked like, that's what allowed me to do that investing and participate in some of those big moves that we had, where if you waited too long, if you wait until you're, I guess, feeling better about it, and you feel like, oh yes, this is for real, a lot of times it's too late by then. Yeah. Exactly.
Exactly. So a great lesson there from Bill O'Neill. And one other fun little tidbit about optimism is what he would write in books where he would sign. You talked about going with him to a lot of seminars and things like that. People would want him to sign their books. So that's another little fun tidbit as well.
Yeah, one of the things I saw him write over and over was, to people, go for it. You can do it. He truly believed, again, that this is something that anybody could do. He was very open about sharing his knowledge. Again, he didn't have to do that, right? He had all this knowledge that he gained, all these studies he did from the computer, and he was very free in sharing that because, again, he believed it was something that could open doors for everybody. As much as we call him a genius, he was very honest with me. He was like, I was not a great student. I was a C student. That just goes to show that, he did have the discipline, the consistency, the study, and also the humility, just kind of looking at it and saying, hey, I don't know everything about this. And I've got to look at what is working, what other people are doing that's working, and kind of learn from them. Whether it was looking at Jack Dreyfus and the Dreyfus Fund, what they were doing, or Gerald Loeb, reading his stuff, Jesse Livermore. He had all of these people that he wanted to learn from and find out, hey, what is it that actually works? And just really kind of follow along with what worked in the market as opposed to a lot of the theory and what should work and what it should do. Yeah. It was like, but what is it actually doing?
So Bill's upbringing also influenced other stories that you have to share, Justin, with his frugality, what car he drove, how he traveled, and things like that.
Yeah, I mean, certainly when I started working for him, he was driving a 10-year-old Toyota Land Cruiser. And by the way, you can still see that Land Cruiser in the parking lot. He eventually, we forced him to ditch it because we just weren't sure if it was safe anymore. I mean, the mirror was like, falling off and, all of the stuff. So, but yeah, it's still there. The mailroom uses it now. But he was very against buying depreciating assets. He's like, I want to have my money going towards these appreciating assets, these stocks, the business, stuff like that. Scott O'Neill, his son, would tell about so many stories when he was growing up, how they didn't have furniture for a long time because he just didn't want to buy something that he knew was going to depreciate. So Scott said he had a great time because he'd have these whole rooms without furniture where they would be playing ball, in the house because there was nothing to knock over. His wife had that same mentality. For as much money as they had, she still did a lot of shopping at thrift stores, and not just as gifts. It was for herself too. She just didn't see a reason why she should spend more money than she needed to on things that she didn't need or things that she could get at a discount. So they just all had that mentality. I mean, Bill flew coach with me a lot of times. It wasn't until much later that he was like, gosh, these trips are getting a little exhausting going across country, that he started flying first class. But for most of the time I worked for him, he was flying coach with me, and we would chat about stuff, preparing for whatever meeting it was that he had going on.
Yeah. And that frugality and that humility are two things that also contributed to investing success in terms of, hey, if you're frugal in your personal life, that's that much more money that you could put into the market and compound and really grow over time.
Absolutely. And I think that was the issue. Why would he want to buy a flashy car when that money could go into the market and become something so much greater? Now, and even his house. I mean, he's living in the same house that he bought in the 1960s. Now granted, it's had some upgrades, but it's still, why move with something that's, working for you? So he didn't have this constant need to upgrade. And, again, spend money on things that were unnecessary when, again, he could put that money into the market and create something even bigger.
And let's also talk about consistency, something that was huge with Bill, that persistence and consistency, the routine. What did you pick up from Bill on the consistency front?
Well, here's just like a little story to kind of give you a sense. I remember this was a trip that we took to New York, and a lot of times we would pick hotels that actually did have pretty decent gyms. You know, he wanted to make sure that he could work out, you know, because that's something that he did at home. And so he wanted to make sure that there was a gym where he could work out when he was traveling too. And one of the times it just so happened, I decided, you know, on a lark, hey, you know what? I should work out. And it turned out that Bill was working out at the same time. I ended up kind of just following along with what he was doing. Now, keep in mind, I was in my early 30s at this time. He was almost 70. And I found that I had to lower the weights a little bit for myself as I was following Bill on his stations. You know, it's like, oh, I could do a few, but then I'm like, oh, I don't think I'm going to be able to do as many sets as Bill is doing. So I'm going to have to lower the weights here. And then the next day, we're getting ready for these meetings, and I'm sore, you know, and he's just, you know, going along, you know, skipping about. And it really had to do with, this is something that he was doing consistently at that time, had been doing for years and years. It's not that he was doing super heavy weights, but, you know, he had that consistency. So he had that consistency also with investing, you know, so he had a routine where he would get these big maroon books every Saturday morning, and he would go through them, and he would just flip through page after page after page. It had all the chart information that he needed to see the technical action. It had a lot of the fundamental action. And this is how he would do his searching. He would look for stocks that looked like they were setting up. This is how he found Apple in 2004. He didn't really know about the iPod or the iTunes or what was happening at that time and you know, how they were revolutionizing music. But he did see the chart, and that's what started him looking. And it's because he had that routine every Saturday to do this that he would really not miss too much in terms of stocks. He would see the chart patterns form. He would know, okay, let me do a little bit more research on what the story is. One other thing I should share is that when we went online, when we went to investors.com and started putting in all of our old articles, one of the things that we had a lot of were these New America articles. And we also saw that sometimes people were you know, doing mining where they were, you know, grabbing a lot of our stuff. And so what we discovered is that most humans weren't reading as many New Americas as Bill was. He was reading like all of them, you know, going back into archives and reading all of these, you know, New America articles. That was just another thing that he did consistently. He wanted to make sure he was reading up on these companies. The reason why he called it New America was, again, that optimism. And, you know, between the charts and these fundamental stories together, that's how we would find a lot of these big winners.
Yeah. All right, Justin, any kind of goofy, funny story that you have, a quick one to share about Bill as we wrap?
There's a lot of those. I mean, I got to say, you know, when Mike Webster and Charles Harris were sharing an office with him, I was right outside. I think they were very good at making him actually kind of giggle. You know, he overall was a very shy person, but he had no problem talking about the paper because, again, he had a passion for it. He wanted to get the word out, and he did little quirky things too. I mean, he a lot of times would wear a Mickey Mouse watch that he got from his wife, and that's, you know, when he was speaking, you know, that's how he would refer to, you know, how far along he was in terms of his time. He had a little watch that he would look at that had Mickey Mouse hands, you know, telling him the time. And he certainly also did a lot of reading about successful people. Just in the same way that he had these model book stocks, he really was very interested in what made successful people tick. And that's why he came up with the 10 secrets to success. And the first one there was how you think is everything. And, you know, in doing a lot of the biography reading that he did, he just found that sense of optimism, that entrepreneurial spirit, that was just something that was in common. So if you can kind of take that for yourself, you know, do some reading of some biographies of successful people kind of get into their brains a little bit, you find a lot of nuggets of wisdom there in terms of what's worked for other people and hopefully something that you can get to work for yourself.
Yeah, I think Bill was full of those nuggets of wisdom. And when I started working at IBD, I was lucky that he was still there. You can check out the podcast archives for my little story about how I met Bill and all that. But one thing that he told me when I started was do more than they expect. And I feel like I took that seriously. I mean,
yeah, you have done that, Allie. I will say you have certainly
we all
done a
do.
lot more.
It's a collective. You as well, Justin. But hey, yeah, Bill paid for part of my education, so I will definitely do that. But if you called up Bill today, he's not involved in the day-to-day operations of IBD anymore. But what do you think he would tell you right now? What would be his biggest piece of advice to you today?
You know what? I think it's the same advice that he was always giving. You just got to stick to it. And keep on learning. Even when I had been working for him for 15 years and he had been at the game for 50 years, he was still trying to learn new things and try and figure out do new studies and see if there was any extra thing that he could get an edge on to make him more successful. He was never pleased with just resting on his laurels, and he didn't think that any company that did that would last. There was always the new guy out there ready to take your lunch. So he was always feeling like you had to keep up and put in the work. That was just a matter of something he wasn't afraid of doing. He could have certainly retired long ago, but he was one of the hardest working people at the office. Every day he started very early and didn't finish until very late. And on weekends, he was filling up these yellow pads of paper, legal pads, that he would come in on Monday with, here are all the ideas of things that I have that I want to try this week. So he was constantly thinking about ways to improve everything.
Yes. And how many years did you work with him, Justin?
So 1999, September of 1999 is when I started. And, Bill retired around 2015.
Yeah.
But then I started working for Scott O'Neill for a little while, So, I was still involved in the businesses. And then eventually I moved down to the markets team and worked more with Chris Gessel. So, Chris Gessel, of course, had a lot of interaction with Bill as well, because Bill was very involved.
Get him on. He's next.
Yeah. So, I mean, again, Bill was always very involved with the paper. He, again, those yellow pads, he was coming up with, hey, let's try this in the paper. This is something different. This is something no one else is doing. And this is something that will help investors get better.
Mm-hmm. Well, Justin, we're so glad that you had those 16 or so years with Bill to share all of these awesome stories and learnings, and that really shines through every day on IBD Live. We always appreciate a good Bill story every now and then. So we're glad we have this video to kind of put some of them together for everyone to enjoy in one sitting. Thanks so much, Justin.
Okay, thank you, Allie.
Well, I hope you enjoyed that video with Justin. It was so much fun to make, and it's always great to talk about Bill O'Neill. There's so many great stories. Do you have a Bill O'Neill story or a favorite lessons from Bill? Well, let me know in the comments, and make sure you subscribe to my channel to stay up to date on all the latest videos. We'll see you next time.